Good afternoon, good afternoon. Welcome to another Wall Street Wednesday with Professor Milligan. Welcome. So, hey, what's going on there, Cody? Before I get started, as usual, let's see, what is this? Don't know who that is. So before I get too busy into it, let me do what I always do, and that is, one is let you guys know that, I'm sorry, I'm reading. So welcome. I do apologize. What's going on, DJ? What's going on? So again, let me start out. My attorney will be mad at me. So these are my opinions, my thoughts. I'm going to tell you what I think, what I like, what I don't like. Please speak to your financial advisor. Do not do any buying or selling based upon what I'm saying right now or what I'm about to say. Again, my disclosure from my attorney. So a lot of interesting things going on. So I know that I put some things up. I'm not sure where I want to start. I'm going to give people a few more minutes to join in. And then I'm going to start digging in about some of the things that we've talked about in the past and some of the things that's going on. As you know, the market showed a lot of volatility today. The cryptocurrencies basically sold off. They had a bounce. So we'll talk about that, and the whole buy them on the dip. I'm looking at some charts, buy them on the dip. So it's going to be interesting to talk about this. Excuse me. So just give me a second. A few more people will come in. So let me start out with this first and foremost. Oh, excuse me. Let me swing into I talked about some things. In fact, let me put this up. Where's my pictures? There's my pictures. I put this up today. So I put this up, which basically was showing you what the markets were doing in terms of the currencies and how much they were down, 31%, 25, 26%. So anybody that's followed the cryptocurrencies and followed the market knows that I'm sorry, I'm laughing because people are typing in the chat box, no more money to buy dips over here. So I'm just showing you that. Now let me just switch to another one. Bear with me a second. And let me switch you to another picture. And this is what I want to talk about real quick. It's a numbers thing. So I do this with my students. I'm doing it with you guys. I know a number of my students who've been on here before recognize this. What's going on, Ham? And all I want you to do is start from the left. The red is your loss, all right? And the green is what percentage move you need to see to get back to breaking even. Now, the reason why I'm doing this is to help you guys understand what I mean about big losses. Big losses require bigger moves just to get back to break even. So I'm going to start right there at 50%. You own any asset, drops by 50%. All right. You buy a stock at 100, goes to $50. In order for that stock to get back to 100, you need a 100% move in the stock to break even. That's not a profit. That's to break even. All right. The other one next to it, a 60% drop in an asset price will take you 150% move to get back to break even. All right. Now, two things when you look at this. One, you want to do your best to avoid big losses. All right. If you're playing this game, if you're trading these markets, if you're in here, you're going to take losses. All right. It's just the nature of the game. So all I'm saying to you guys is limit your losses. You can see down here at a 20% loss, you need a 25% move to break to get back even. That's doable in a short period of time. Or if you feel like you can make 100% on your money in a short period of time, it means you're going at the volatility. Nothing wrong with that, but understand it. So if you're going at the volatility to try and make high returns, you want to make sure that you're using stop losses and or hedging. All right. Again, most investors don't think about this. Most investors don't think about the risk. There's risk in everything you do. What makes a successful trader, investor, to a non-successful investor, trader, basically is how you handle losses. How do you handle when you're being wrong? The worst thing to do, and somebody already typed this in, is to buy on the dips. do not buy on the dips. All right. When you're buying on the dips, it means that you are trying to time the market and you know where bottoms are at. Don't do it. All right. It's just a sure, fast way to lose money. So again, as you look at this chart, you can look at this on your leisure. But again, all I want you to understand from this is the reason why you need to hedge and the reason why you need to use stop losses. All right. Big losses take even bigger moves to get back to break even. So I'm going to throw a number out there again. $100 stock drops to $40. All right. You need a 150% move to get back to $100 what you paid for, which is your break even point. Now, I don't know about you, but we don't see 150 point moves on a regular basis on a whole bunch of stocks or other asset classes. So that's what that is. Now, let me close this out and move on. All right. So since I started with the cryptos, let's talk about the cryptos. I'm looking at the chart I'm looking at the chart right now on Bitcoin. So, and I also posted something else on Bitcoin. So you know what? Let me go to this other post real quick. All right. What you're looking at, and I have a habit of doing this. I always want to look at assets. No asset class is in a world by itself. All right. They have other assets that are being affected by them, and they're affecting other assets. What you're looking at right now is the candlestick chart. The red and green is Coinbase. Spit it out, Mike. Is Coinbase. All right. And that's what you're looking at. The purple line is the futures for the Bitcoin overlaid. You can see the correlation between the two. You can see what's going on. Now, you should not be surprised. Why? Well, Coinbase is, I think right now, is the largest place to actually trade Bitcoin. Excuse me, not cryptocurrency, but Bitcoin, the Bitcoin cryptocurrency. Also, they basically cater to retail clients, not institutional clients. So what does that mean? One, it means that institutional clients typically have a higher threshold for paying. They typically buy and hold. Retail clients typically are in and out. All right, they get in, they get out, they don't hold on. But you can see the correlation between the two. Now, my contention is that Coinbase basically is being moved. The catalyst that's moving Coinbase is Bitcoin. As Bitcoin goes right now is how Coinbase is going to go. Now, one of my Ham basically talked about Voyager Digital, which is another crypto trading platform based out of Canada. The chart is almost identical. The chart overlays. I didn't have time to put it up. So whether it's Voyager Digital or Coinbase, they are there's a direct correlation between them and the cryptocurrency, Bitcoin to be exact. As Bitcoin goes, that's how these two are going to go right now. So you can see it. The sell-off was really interesting how, you can see it. There's a visual. All right, let me get out of that real quick. And Ham, I did look at Voyager the same way. If you do a correlation or put both charts up, you'll notice that Voyager also is being affected by Coinbase. All right, so now I brought up Bitcoin. So Bitcoin has major support at 30,040. 30,000, basically 30,000 is major support. That's what major support is. Today on the breakdown, which is really interesting, Bitcoin broke through four support levels. End up closing right at a near-term support, which is at 40,000. So technically it's at that range. So let me say it again. It broke through 3 support levels today. All right, now it happened fast, but it did break through 3 support levels with a low of just below 32,000. End up closing right now, it's at 40,000. Couple of reasons why, as you guys start chatting, the China ban. The other thing too is Elon Musk has come out and said that he cannot use Bitcoin as a currency to buy and sell automobiles. Again, we talked about that on this show. The reason being is there's too much volatility to use this as a currency. As a business person, businessman, businesswoman, could you imagine getting paid in cryptocurrency 2 or 3 days ago at 48,000, only to see it drop down to 32,000 before you could cash in? Now it is back at 40,000, but again, just understand that volatility. That's more than your profit margin. If you're using Bitcoin as your currency to buy and sell, to accept as payment for buying and selling security or assets from clients or customers, what you're doing is you just put volatility into your business. And you do not want volatility in your business, not when it comes to your currencies. So that's what's going on with Bitcoin. All of them took the hit. So I'm pulling up Ethereum right now. Ethereum took the hit too. Ethereum has the same story. Ethereum support is around 2,500. Let's see. Today it also broke 4 support levels, closing at 2,600, just above that major support at 2,500. All right. For those who say buy the dip, understand this. You need the stock to, you need the currency to work through 32,500. That's where your next major resistance is. You're right above support. If it breaks this 2,500, expect it to come back down and test that 2,250. And then it broke down today to a major trading range between 1,600 and 2,000. It broke down into there. So you can see it was sliced in half today. I'm going to repeat this to you guys. Do not buy the dips. All right? Make sure you're using stop losses and hedging. One or the other. There's no shame in being stopped out of a trade. There's no shame in being stopped out of a trade 2 or 3 times. All right? It might take that to get it right. Understand this, though. The most valuable asset you have as a trader, as an investor, is your cash. All right? It's also the second most valuable thing is the profit you've made already. So if you see something start to break down, have your numbers, have your place where you're going to get out. Usually it's just below support. Get yourself stopped out, and then you can always go back in and do it again. All right, bear with me a second, something in my eye. I'll talk about drips later. Drips is nothing about trading. So those asking me about drips, we can talk about drips later. Interesting comment asking about drips. Drips are nothing more than dividend reinvestment programs. It's where that you can reinvest. Well, I'll do it right now. You can reinvest your dividends at basically no commission. Every major Fortune 500 company that pays dividends has a drip program. The advantage to drip programs is you don't have to pay a commission. And also it helps you buy stock at all different levels of price. The disadvantage to drips is that you're buying the same stock, same company. So there is no diversification. But again, you guys know I'm not a big fan of diversification in the first place. All right. That's Ethereum. Ethereum. By the way, I wouldn't touch any of them right now. This is just me. You know my philosophy. I'm pulling up Ripple right now. The other one oops, wrong symbol. The other one I talk about, Ripple. Bear with me a second. Give you some numbers. Wrong Ripple chart. That's the Ripple chart I want. Right there. All right. Interesting thing about Ripple. Ripple was in a trading range between $1.70 and $1.40. It broke that today. It actually penetrated below $1, which is interesting. Dollar was somewhat major support. It broke down below that dollar. But again, like the other currencies, it ended up closing at $1.17. It's in a trading range right now between $1 and $1.40. If it breaks through that $1.40, you got resistance at $1.70. If it breaks through $1.70, you got resistance up there at $1.90, $1.95. All right. What you're looking at now is and as an investor, trader, you want this to go through some consolidation. Consolidation is good. All right, let me pull up the other ones real quick. So that's Ripple. The other one is Cardano ADA. Same story. Cardano got up to $2.40. I had sent out a little tweet on that, posted on Instagram on that. Broke out, went to $2.40 and change. Then it started pulling back. It pulled back and tested support at $1.80 today. So it broke through that. It came all the way down to below $1, and $1 is major support for this. It bounced off that dollar, bounced up through that resistance at about resistance at around $1.50, and now it's back into that trading range between $1.50 and $1.80. So that's where you're at. And the last one I'm going to do, well, let me pause for 1 minute. The four currencies I just did. Bitcoin, Ripple, Cardano ADA, and Ethereum all have business applications. All right, they all have the ability to generate revenue. They all have the ability to be used by corporate America, by using corporations, not just corporate America, but used by corporations around the world and governments around the world. They all have that type of application. I think over the long term, once they get this volatility kind of calmed down, that you'll see more and more of these. That's why I believe the Bank of China, basically China said we're not using it. That's the reason why Elon Musk can't use it to buy and sell, to sell his automobiles. Too much volatility in it. Now, the reason why I said all that is, the next one I'm talking about is Doji. Dogecoin has no value. All right, it's not being used for business applications. It really is. You guys know as much as I do that it started out as a joke. And I'm pulling up the chart right now. Bear with me a second. There it is. Nope, that's not the one. But Doji's interesting. All right, so here it is. All right. As you guys know, Doji got up to 75 cents with Elon Musk, was on Saturday Night Live. It pulled back. He made some comments. Then today it broke some near-term support at 45 cents and traded all the way down to below major support at 25 cents. Now it ended up rallying back and closing at 37 cents. But again, you see the volatility in here. Again, Doji scares me. And the reason why Doji scares me is that there's no real business application for this coin. This coin is basically being moved off of demand. I'm not even going to say supply. It's being moved off demand. When more people want to own it, they buy it and push it up. When more people want to sell it, it drops in price. I don't know of any institutional sponsorship. Now, what I mean by institutional sponsorship, I don't know any institution that's talking about using this coin. Now, Elon Musk talked about it, but again, he had to back off with that. And the other thing too is, which has also come up and you guys know, is the amount of energy being used. So the cryptocurrencies are not what you'll call an energy efficient asset. In fact, it's just the opposite. But with all that said, I do believe it's here for the long term. I do believe you can make some money in it. I'm going to say it again. How do you trade these? When you buy these or you short these, when you get the run you're looking for, take your profits. Make sure you're using stop losses or buy losses or hedging it. Now, you can hedge these. Some of these currencies actually can be hedged because they do have some future contracts on them. But again, if you don't want to hedge it, for the smaller investor with a smaller position, use some stop losses. It's real simple. I'm going to make a statement to you, and this is kind of interesting. I've been doing some searching, some looking, some thinking, and what's going on, Paul? And one of the things that's come to me is this. I always say this. If I was starting in trading today, knowing what I know now, if I was going to start trading today, first thing is you need to understand the asset class and what it is, what it's all about. I'm not telling you to memorize it. I'm not telling you to open up a textbook and learn all this. I'm just saying that you need to have a basic understanding of the stock and the stock market, what a stock is, what an option is. Once you get past what these basic asset classes are, I think the first thing that you need to learn in terms of trading is technical analysis. Now, you're talking to a college professor who teaches fundamental analysis, which is a study in terms of fundamental analysis. I can boil it down to one thing. Fundamental analysis is nothing more than doing a appraisal of a company or a stock to what you think the intrinsic value is, what the appraised value is. So in other words, what's that asset worth? All right, that's a Warren Buffett thing. He tries to buy these assets at a discount to their intrinsic value. Very difficult to do. Even with the best of minds, these models are not the best. The one thing I found, though, is that great companies with great stories and great companies that are doing phenomenal work in the marketplace, the stock price shows it. And what I mean by that, technical analysis will help you find those. So if I had to pick one thing to learn first, I'd learn technical analysis. All right. In my short period, basically 3 or 4 weeks of watching these cryptos and getting aggressive with them and watching them, it's been technical analysis that's actually put money in my pocket. All right, it's technical analysis. Technical analysis called that move from $1.94 to $2.40 on Cardano ADA. It's technical analysis that called that move for me in the S&P 500 when I said the market was oversold and S&P 500 was going to run. and I brought the NASDAQ Qs. I brought the Qs for 317. They went to 327 over the next 2 days. That's technical analysis. So I just want to share with you that if I were starting out, I'd go to technical analysis. Now, some other interesting things we talked about already. So let me bring these up too. One, last week we talked about staying long your high grade copper. Well, if you follow technical analysis and you use your stop, high grade copper broke its 10-day moving average, you should be out of it. On the short side, things that you can short right now: soybeans, corn, spring wheat, the Canadian dollar, the Brazilian real. You can short all those right now. If you follow me, use those. If you follow my thought process, you can short those right now. Use the 10-day moving average. If it breaks above your 10-day moving average, close out your short position. Real simple. They've already started to break down. That's why I wrote them. Again, if I were you, these are the ones you can short them now. Short them now. They're being confirmed both technically and fundamentally. All right. Options. You can use options on the futures. You can use options. So again, there are options on futures. You want a bigger bang for your buck, then you can actually trade the options on these future contracts. Now I feel like I'm forgetting something. What else was I going to get? Oh, the other thing about Coinbase. I know I'm jumping, but Coinbase I talked about and how it's being affected. Well, the other thing too is Coinbase today raised $1.25 billion in a convertible bond. Now, for those of you who've never traded convertible bonds or never looked at how convertible bond affects your stock, convertible bonds typically add volatility into your stock. So whatever stock now, the convertible bond is a convert for Coinbase. I didn't get the terms of the convert, but it was issued today, 1.25 billion. And for those who don't understand, it means that you can actually convert your bonds at a premium into Coinbase stock. Now, typically corporations do this when they need to raise capital, but they can't issue any more stock and they don't want to issue any more what we call straight debt because of the coupon rate. So they'll issue convertible preferreds. There is an arbitrage play between the convert and the common stock. For those who don't understand, there's a certain range that they should trade through. And when that range gets out of whack, they're going to sell the the convertible bond and buy the common stock. Or the other direction, they could end up buying the convertible and shorting the common stock. All right. For those of you who are actually well into this industry, this strategy, believe it or not, was written by Bill Gross when he was a graduate student at UCLA. All right. So Bill Gross has perfected it, and almost every major hedge fund now that trades converts, follows this strategy. All right. So that's what I wanted to bring up. Now, a couple other things too. I mentioned this also last week. The IPO market is under attack. There is no follow through. None. You have deals being priced that aren't even holding their offering price. Who is it? A direct listing today came from Square. Was that Squarespace? Direct listing of $50 a share. And Squarespace, I'm going to see where it closed. Bear with me a second. SQSP. So direct listing was $50 today. Ben is low. Make sure you get my numbers. Today, Ben is low is $42 a share and closed at 48. Now understand, this was also sliced in half in terms of what the private equity market had priced it at. So let me explain. They raised money in the private equity market. All right. I believe the valuation of the private equity market was $10 billion. They coming to the public again through a direct listing at $50. The number of shares they offered means that they basically valued this thing at $500 million. $5 billion, half of the $10 billion. So that's what's going on with this. Again, the company's actually making money, but no follow through. None. Now, this is also the first direct listing that we've had that actually opened up below the actual convert price or the direct listing price and stayed there. So again, you might want to look to short it, play it to the short side. I'm going to put up a couple other ones. The other one is so let me type this up. So the first one I just talked about was SQSP. I said P, not O. The next one I'm talking about is SMWB. And the next one after that's going to be, bear with me a second. The next one after that's going to be HNH. HNST. All right. So I just got talking about Squarespace. The other one, I don't even know the name. SMWB. I'll give you the name in a second. Similar Web Ltd. International stock. Really interesting. Deal was priced at 22. Stock ran to 23 the second day of trading. Bear with me a second. Get my numbers right. Second day trading. And then at my second day trading, it broke through the 22 and ended up closing at 21. And it's been below there since. Again, I checked. I didn't see any options, but this is something that you might want to look to short. Stock's in trouble. Understand this. When a new issue comes to market and it can't hold its offering price, it's telling you it's in trouble. I know you guys don't understand the new issue or the offering procedure and how it works. But the only thing I can tell you is, and I want you to think about this, the CEOs and senior management and the investment bankers travel the country promoting the stock. All right, they get on the internet, they get on these Zoom calls, they travel the country, and what they're doing is they're pounding the table promoting the stock. Before the stock comes public, the senior management can talk to investors and tell them what they think, what's going on. They can tell them all the wonderful things about their company. Now, they can't give them illegal information, inside information, but they can tell them how wonderful business is. It's a dog and pony show. They're out there pumping the stock up. All the good news about the company is on the street. All right, the street knows all the good news, everything that's going to happen, what they're projecting for the future. And with that, if it can't hold the offering price, what other good news is coming out in the next 30, 60, 90 days? Nothing. The street already knows all that news. So if it can't hold that offering price the first 2-3 days, first week, they're in trouble. The other one I'm going to talk about is HNST. All right, this is Jessica Alba's company, Honest. It's been around for a while. All right, she's raised money in the private equity market. Prior to going public, she tried to go public a year ago. She had just raised money in the private equity market. And that last round, before she tried to go public a year ago, they actually lowered the valuation. They lowered what the company was worth when they actually put more money into it. Couldn't bring it public. Come around full circle. Here we are a year later, and now she's come public. Again, another stock. I believe she was priced at $22 a share. I didn't write it down. I believe she was priced at $22 a share. And right now, did not hold $22 a share. And once it broke that $22 a share, it basically sold off. And right now it closed at $15.71. All right. So do we put puts for SMW? Yeah, I mean, you can trade the puts or you can short the stock. For those who have patience, short the stock and basically wait. For those who want, if you buy the puts, the biggest thing that can happen to you if you trade the options is, which has happened to me, is that you're right, but you run out of time. All right, so what do I mean by that? You're right, but your options expire in a week or a month, and your options expire, and then the actual movement comes. So option trading takes a little bit more timing. Let me pull up one other one that just came up, GLBE. This one just came today. What's interesting is priced at 25, opened up below 25, but ran through it. And you can see now the stock's trading at $28 a share. So it had a little positive move to it. I'd keep an eye on it. Goldman Sachs did it. Oh, I'm sorry. It didn't come public at 25. Bear with me a second. It's where it's at now. Bear with me a second. Maybe I was wrong. Yeah, I'm sorry. It did come public at 25. I take that back. All right. Let's see. Now I'm going through. I pretty much covered everything I wanted to cover. So now I'm just going through looking for questions and answers, and I will talk about whatever you guys want to talk about. What's my strategy thought process here? I'm new here. I'm not sure what you mean. The reason why I said I'm not sure what you mean is strategies all depend on what kind of trader you are and what assets you're trading. Real quick before I forget too, I did look at the VIX again. The VIX did actually touch the upper Bollinger Band, but didn't firmly penetrate it. The other thing too about the VIX, and hold on a second, let me pull it up. Bear with me a second. I'm pulling up the VIX. See where it closed. Let me put my Bollinger Bands on it. So yeah, today the VIX actually penetrated the upper Bollinger Band. It was really interesting. As you guys know, the volatility from this morning. So it did penetrate it. It did not stay there. So it actually opened up below, closed below. So it did not penetrate. The other thing I always look at when I look at the VIX, and now I'm going to the S&P 500 index. I'm going straight to the index. Bear with me a second. Put up my moving average, the 10-day moving average. The other thing about the VIX, and this is interesting. You're going to laugh when I say this. When I look to actually buy the Qs, my signal is two things. One is I want the VIX to give me a buy signal, and two is I'd like to go long the market when the market's trading under the 10-day moving average. All right, that's when I want to buy it. So we're still under the 10-day moving average, but you can see that the spike would happen here. But again, the VIX has not given me a buy signal, so I'll be patient and wait. The way we rallied on the close today, I would assume that we'll probably be up tomorrow. But again, I haven't got a buy signal. I'm very patient when it comes to this. Yeah, I'm looking. You can run out of time on these calls. That's happened to me a number of times. Now, who is this? Saint Cornfield. Are you actually up in here trying to advertise somebody else's product on my IG page? I hope not. If you are, I'm going to have to kick you off. All right, let me see what else. All right, so you got some guys who are shorting treasuries. They're expecting prices to drop. They're expecting yields to go up. I see your comment. Hold on a second. Let me just do something real quick because I was looking at this earlier. Bear with me a second. I'm going to my look at treasuries. I'm going to look at my commitment to trade report. So what am I getting on my commitment to trade report for treasuries? Yep. It's interesting. Fundamentally, I'm getting a buy signal on the federal funds rate. Getting a buy signal on that. Also got a buy signal on the 5-year Treasury note. Now I'm talking about fundamentally. So again, okay, cool. I appreciate that. That's the business school you went to. I appreciate that, guy. You'd be surprised how many people try and hack on here and steal you guys from me. So what I was going to say, Mr. Cornfield, well, every time I say your name, Mr. Cornfield, it just makes a smile on my face. My middle school basketball coach, his name was Mr. Cornfield. So every time I see your name, it makes me think about him, Dennis Cornfield. So anyway, it's interesting with the treasury market. I got a buy signal on some of these treasuries, which it means if I'm getting a buy signal on the treasury, the 5-year, also looks like the 10-year was giving me a buy signal in 30 days. That means that, for those who understand, a buy means prices go up, yields are going down. So the one thing I would say to you guys is, remember, yields can only go down but so far. So if you're playing that, you want to be nimble, you want to be quick and take your profits. Now, again, if you're trading treasuries, $1,000 can get you control of a $100,000 treasury bond, a treasury note. $1,000 can get you control of $1 million treasury bill. So there's a lot of leverage in treasuries, trading treasuries. You don't need big moves percentage-wise to make some money in those treasuries. I'm talking about the futures. And there's also options on futures. Let's see what else. Oh, by the way, Mr. Cornfield, a lot of stuff I used to teach my students at Cal State Fullerton also. So a lot of my students on here. So that's cool. I'm glad that you have a good program that's teaching that stuff. All right, so I got a couple of requests here to look at some stocks. I'm gonna look at real quick. KBWR, don't know what it is. While I'm doing this, I'm pulling up charts. You guys also know that the Special Purpose Acquisition Corporations, the SPACs, as you guys know, they've been called out. We called them out on this show about a year ago when I kept telling you guys, do not buy anything that has no assets in it. The only thing that these SPACs had in them was cash. And people were bidding them up, even though all they had was cash in them. People were bidding them up. I don't know why. I guess based upon who was actually raising it. As they dug into these things, it became really interesting that these SPACs, the insiders, would be able to buy the same stock in the companies that SPAC was buying at a 20% discount. They were making money on that. And then a number of these companies, these SPACs brought companies and then literally never performed. So I don't like those. I don't think it's a good idea. I do, don't get me wrong. Who was it? DraftKings wouldn't have been able to come public without that. So DraftKings did really well. So you can find some quality companies. I just would be careful with it. Now this KBWR, bear with me a second. Cancel that. I'm just looking at the chart. I'm switching to a monthly chart. Bear with me a second. And the reason why I switched to the monthly chart is I just want to see the volatility. All right. I can talk about this. A couple of reasons why. Stock's actually back at its all-time high. It set its all-time high back in May 2018. And then it took basically, as you can see, 3 years to get back up to its all-time high. It took 3 years to get through all that congestion. It happens sometimes, guys, so just bear with me. The other thing I'm going to pull up real quick is the volume. Come on, volume. All right. So looking at this chart, you got major support at $60 a share, right around there. And you got resistance at the old high, which is 67. You have some minor support at $62, $63, but it's real minor. Easy could break that and then test that $60 level. Boom, 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 boom. Now, the one thing that kind of bothers me a little bit is that the last run at the old high, which happened last week, that last run at the old high failed. And then it's going sideways. So you like to see that second run. You like to see it actually break above that. So it could be pausing and catching its breath, trading sideways. You're right now where it closes at the middle of the trading range. Again, it easily could actually test that minor support and then major support at $60. Not a bad looking chart though. It's worked its way out. Again, I don't know what the company does. I'm just speaking based on technical analysis. I highly recommend all you guys learn technical analysis. I got another one of these trusts. I'm not a big fan of trusts. You're like, Professor Milligan, you're not a big fan of a lot of things. I'm not a big fan of trusts. All right, looking at a long-term chart, this trust got up to $48 a share back in 2011. It's right now. I got to keep an eye on my time. I was not able to download last week's Wall Street Wednesday. I just ran out of time. All right. Silver Lake has resistance right here where it's at $27 a share. You got some minor support at $23 a share and some more major support at $20 a share. It's a trust, so I'm not a big fan of silver share trust. I believe in, if you're really interested in trading silver, open up this trust and see what stocks or what silvers move in the market. I got a great question here. I just saw it. Why do people sell companies when earnings were better than expected? So let me answer that real quick. First and foremost, the market moves based on unexpected news. All right. The market has expectations for everything. They have expectations for earnings. They have expectations for what the market's going to do. They have expectations for interest rates. The market does not like surprises. That's the first thing with earnings. They have expectations. They don't like surprises. The second thing is you have a lot of investors out here that are playing stocks just for their earnings. They'll jump in before the earnings, and after the earnings are announced, they jump out. And the third one is, well, I've just had a brain freeze. So I talked about what? I talked about, so my mind's racing right now. I apologize for that. So again, I talked about earnings in terms of expectations. I talked about traders. The third one is expectations. When a company announces earnings, they do a couple things. They announce the quarter that they just finished. They give expectations for the quarter they're in and the upcoming year. So even if a company blows out the number to a positive, but they come forward and say, next quarter is going to be kind of weak, or next quarter won't be as good, that also can move it. It's not really gambling. And I'll tell you why. Because certain things become obvious. And it might be gambling on the short term. And what that means is, so let's take a case in point. Company blows out the number, reports great earnings, and says the future looks really good. And the stock sells off. Sells off maybe because the short-term traders who are trying to trade it for that quick profit, they get out, they take their money and run, or they cut their loss and run. But understand this. When Wall Street comes back and puts their valuation on that company with those new numbers and new projections, they literally might raise their target price. And if you watch over time in a flat to up market over that quarter, you'll see the stock trade back up to that higher price range, all right, based upon the recommendations on Wall Street. It might not happen fast. The gambling comes in for those who are trying to basically trade the number. Now, I've done it both ways. I've been in stocks ahead of the number where it's blown it out and made a tremendous amount of money in a short period of time. I've also been in there where that lost money quick near term, but let it go because a great company with great earnings raises projections. And one that comes to mind right now is EPAM. Now, EPAM, for me now, I think it's been almost a year. EPAM came out with a great number and blew out the number, earnings. Stock kind of rallied a little bit. They had a rally before that, but then pulled back. Came out with a great number, and then they came out with great forecasts. I got in there ahead of the number, didn't make much, but I'm still long now. And when I last checked, I've got over 100% return in that stock. So it's not speculation so much. And I talked about this, and I put this in the chat, on my post, and that is earnings can be a catalyst. So for you guys who are trying to make money in these markets, the thing you got to figure out, and that's why I was showing you the CoinBase, they're catalysts that drive certain companies, certain stocks. All companies typically have a catalyst, something that's driving their value, especially the ones that are performing. So I just mentioned you, what's driving Coinbase? What's driving Coinbase really is Bitcoin. All right, Bitcoin goes up in price. They're heavily invested in Bitcoin, and people and traders are trading Bitcoin. So that's what's moving that stock. All right, Bitcoin. Now, what moved the company I just talked about? EPAM. EPAM's got some great technology that's going on, but the thing that brought it to the public's eyes was when they blew out the number on earnings a year ago. They blew out the number, and they've been kind of beating the number ever since. So, catalyst. What's going to drive the value? Catalyst. All right. When you can start narrowing down catalysts, you can start making more money. All right. Again, a catalyst is something that's going to drive the stock price up or drive the stock price down. For those of you who've been trading earnings, you didn't realize it, you were using earnings as a catalyst. Now, I want you to dig a little deeper than that. And the reason why I want you to dig a little deeper than that, when you can understand what's driving those earnings up. So let me give you a case in point. I'm backing up. I'm using historical data. We're going into a pandemic. Zoom stock took off. Zoom reported earnings. All right. The number of people they signed up with, that were using Zoom, they blew the numbers out the door. And as the pandemic got worse, the numbers kept going up. Stock ran from that. All right. Now, if you look, the growth has slowed down. Why? Everyone that's going to sign up for Zoom signed up for Zoom. They're not seeing the same number of people signing up. The growth in signing up and the growth in revenue now is going to slow down, especially when we're coming out the pandemic. It's going to be higher than it was 2 years ago, but it's still slowing down. And the stock price is reflecting that. All right, as I pull up Zoom, I'm pulling up the chart. I looked at the chart the other day. Hold on a second, I got to go to stocks. I pulled up the chart the other day. And Zoom peaked October 2020, and from there, it's done nothing but come straight down. It's literally just bounced off of a support at $278, $280. And there's resistance at 317, 318, where it touched today. So you're in the old trading range. But understand, the high was just under $600. The high was 587. So you can kind of see what's happened here. But again, why? And this is the reason why investors like me and investors like you listen to these earnings calls and listen to what they're saying. It's not so much that even if we're not short-term trading, it can help you understand when to get in, when to get out. The other thing too is when these companies report these great earnings and have been reporting great earnings, you can see it on the chart where the stock basically pops and runs a little bit. And then when you look for the next quarter, you can see where it trades up and trades. So my advice to you guys is, one is to start studying technical analysis more. And two is to start understanding catalysts. What's going to drive your company? What's going to drive the value? The more you can understand what's driving it, the better chance you have to make money. All right. And by the way, same token, if the pandemic drove the price of this stock up, Zoom, the fact that the pandemic stopped and they're not signing up as many people probably is another reason why the growth rates are going to slow down. One of the things I always say, and I'm saying to you guys, is when you understand the reason why you purchased a stock in the first place, not because you saw it on Reddit, not because somebody told you how much money you can make in Doji or how much money you can make and you said just went and brought it, but when you truly understand what's going to drive the value, when you truly understand that, all right, you're going to take your trading to a whole new level. And when you truly understand what's driving value, you truly understand when that driver is not working or that driver doesn't exist anymore, how the stock's going to come off in price. All right, I can give you tons and tons of examples of catalysts. I'm not going to do it. I'm just checking if there's any more questions, any more charts that anybody wants me to look at. Again, I've got 12 minutes. I'm not going to go 12 minutes. The reason being is I want to save this. Last week I missed it. So I do want to save it. I've been having some other questions about some, well, I'll look at this too. I had some other questions about, I see the dollar sign there, Mr. Cornfield. So is that an index, LIT, or is that a stock? I don't think that's what you want. Maybe it is. What do I think about AT&T's merger? I think it's a really smart merger. For those of you who don't know, Discovery Channel is the most profitable channel, cable channel, streaming channel in the marketplace, by far. The amount of revenue they generate. Okay, I did see it, Mr. Cornfield. So for AT&T, I like it. I'll tell you why. Basically, it's all about content now. They're all trying to actually get content. So AT&T buying Discovery Channel is going to be nothing but pure profit. Again, more content. And that's another way that they can sell it to their clients. So I like the merger. I think it makes sense. I just hope that, Discovery Channel doesn't get buried into AT&T. The reason why I say that, though, is it could, another thing when you look at these mergers is the culture. Discovery Channel's culture and AT&T's culture. So hopefully the cultures will match. I'm looking at this, what is this? This global FX lithium battery ETF. All right. Let me just do one quick question. So the symbol is L. Type it up. Mr. Cornfield gave it to me. The symbol is LIT. So that's what I'm looking at right now. All right. So as you guys know, a lot's been going on with the batteries. It's been really interesting with the batteries. supposedly, I don't remember who, but someone's come out with a battery. I think it's one of the other car manufacturers. Somebody's come out with a battery that is something like 10 or 20 times longer than anything else out there. They're using a different type of natural resource. So I don't remember what, though. I did remember reading this. So getting back to LIT, you've got near-term resistance at $64 a share. Like a lot of things that sold off over the past couple of weeks, there's a minor support at $58. If it pushes through the 64 number, you got resistance at 68, and then you'll be in that old trading range between 68 and the old high of 74. The one thing I can say is looking at this, I'm looking at volume. Volume is basically has dried up, so it did spike earlier. My bet is back in January, it spiked off that run. I mean, if you look at this, thing basically started running in October. And in October 2020, it ran from $42 a share to $74 a share. And what, in 2 months, 3 months, October, November, December, 3 months, it ran. It's doing some backing filling. Volume's dried up. So I would just say, I would be careful. If you decide to buy it here, I'd probably use a near term. I'd use a 10% stop loss. So a 10% stop loss of 61 would be $6, would take you down to $54. Yeah, I'd use that if you buy it here. Looking for it to break through that old, that's resistance at 64. All right. I don't do themes, Mr. Cornfield. I don't do themes with who's in market and who's in this. And the reason why I don't do it is I believe the market itself would tell you. So I got 4 more minutes. So let me explain what I mean by that. The reason why I recommend technical analysis to anyone that's on this call is this. You and I are on the outside. All right. We don't have, millions and millions of dollars to spend on research. We don't have people that we can actually fly out and sit at the company's doorstep and count how many widgets they buy and sell. And we don't have that capacity. All right. So all we have is the information that Wall Street puts out with us, and Wall Street puts information out that kind of biased. Their information is always on the buy side. The one thing that you cannot hide is price and volume. You cannot hide it. So in other words, what do I mean by that? I get a call from somebody that's the greatest insider information you ever want to know. I get a call from somebody, I don't know, who said, Mike, I'm about to go out and buy, my company's about to make a merger with the Buy Discovery Channel. I work at AT&T about the Buy Discovery Channel. The only way that I can actually put money in my pocket, and it's actually illegal too, is to actually buy the stock or the options. And because that information is so good, I'm going to buy a whole bunch of it. And also being the kind of person I am, not only am I going to buy a whole bunch of it, but I'm going to call up my friends and say, by the way, I got a real great call on Discovery Channel. You want to go out and buy it? So a couple of my friends are portfolio managers or asset managers. Next thing you know, the volume in Discovery Channel has doubled, has tripled. In fact, I'm going to look at the symbol right now. DISC. There's 2 classes, Discovery Channel, Class A. Class A and Class B. I'm going to Class A. All right, so I don't know when they announced it. Come on, Mike. I'm just zooming in. All right, so Wall Street was caught off guard. The volume increase came after they announced it. But we get that information, and the stock spiked that day from a low of, so when that news came out, the stock spiked from a low of 33 to a high of $40. All right. So we get that news. The only way we can participate is to look at the price and volume. And it told us something was going on. All right. That's the reason why we track price and volume. The other thing about why we track price and volume is institutional investors. Institutional investors don't buy a stock looking for 2 or 3 points or 10% move. The large institutional investors and mutual funds and so forth, they buy stock at 10 looking for it to go to 20 or 30 or 40. They'll buy it and literally hold it for 2, 3, 4 years. So take that and put it into your favor. Price and volume will tell you a lot. It'll help you too. I've actually looked at companies and watched price and volume and said, what's going on here? Not knowing anything about the company, what's going on, and went and did some research and found a really great company. All right, I'm about to hop. I'm looking at my time. I don't see any other questions. I know, so let me say it again, real quick on a wind up. The tech stocks are under pressure. NASDAQ did have a bounce today. Did end up closing almost flat after the sell-off we had earlier. But again, the markets, especially the tech stocks look like crap. A lot of them are in their second, third support levels. So just be careful with these. If you're in here buying dips, be careful. Don't buy dips. Understand if you buy the dips that when you hit certain resistance levels, there's going to be a sell-off in the stock just because it takes a lot of work to work through. And if anything, there are some really, really good companies out here with some great charts. I would look to buy those before I look to buy some of these things off the dip. Some really good companies, some great charts. All right, let me see. Do you AT&T price will continue to drop since they have cut the dividend in half? AT&T telephone is a different animal now, and what I mean by that is they cut the dividend. But if they cut the dividend, which I suspect they did because they're making acquisitions and they're actually using the money to expand, it's probably a good cut. I don't know if the stock's going to stay under pressure. I don't think it would. Now, again, this is straight opinion. There's nothing technically behind what I'm saying, and I'm looking at the chart right now. And I'm looking at this chart, and AT&T's got a lot of work. I'm gonna be honest with you here. My opinion, I wouldn't touch the stock. You couldn't pay me to buy this. I've got no interest in it. I'm looking at the chart. I'm looking at the volatility. There are so many other things out here that have much better looking charts, much better volatility, have a better story, which I think have less resistance to going higher. AT&T's got a lot of work to get higher. All right, guys, I got to hop because I want to save this call. I'm going to post it. So have a great week. Make plenty of money. And again, you guys can DM me any questions or anything that you want to talk about. With that, Professor Milligan signing out. Look forward to seeing you next week. And as I go, there you go. Let's go, Yankees.